Hello, everyone. Welcome to the weekly roundup. Today we'll cover interest rates, economic growth, and earnings releases. Hello, Ben.
Hey Eva,
How's it going?
it's going good.
Weather nice?
It seems like it's finally, I see some blue sky behind me here, so it seems like it's finally coming.
Okay.
Yeah,
Hopefully it stays that way. It's been raining all through the week.
it's been rough.
Okay, we're gonna start off with interest rates. The Fed's held rates steady, but bond yields jumped after Wash's press conference. So my question is the bond market questioning the Fed's strategy or, just preparing for rates to remain higher for longer?
I think it's a good question. I think that was the first full press conference that I watched yesterday with Warsh. And my kind of immediate take was that he thinks he can control the market. It's similar to anybody I think that gets into a high powered job. They think that immediately they get into that spot and they can fix it immediately. So my view is that the market said, like, we don't really care what you're saying, and that rates are going to do what they're going to do. And, particularly the long end, I thought was interesting because that was the one that moved the most higher. And there's, I think, a lot of things that go into it. Part of it is what he said is we're going to be tough on inflation. And it's easy to say right now, but when the market does what it did yesterday, I think it'll have a bigger effect and a bigger impact than he can believe. Because if you get the long end moving up significantly higher, that's like a brake pedal on the economy in the US, and the economy in the US is already going slow. He kept saying the economy was strong, almost like he wanted to will it to be strong because GDP came in at 1.3%, which isn't robust. So yeah, so I think the market really said we don't necessarily believe you, and we'll do what we want it to do. Um, you know, as I read through comments this morning from different teams and research and analysts, they still think rates come down next year as opposed to up. So it's a bit confusing his view on inflation, but yeah, yields moving up materially yesterday had a big impact on any growth stocks. So I mean, any of the semiconductors got spanked. You're seeing some of them bounce today, but it was a pretty material impact that press conference, and I think it's important to watch and pay attention to.
Okay, speaking a bit more on growth, um, is the slowing growth and persistent inflation, pointing to stagflation, or, can consumer spending keep the economy a bit more resilient?
So I think we're in stagflation now. I think your point's right about that. So stagflation, for everyone who hasn't and doesn't know exactly what that means, it means that GDP is slowing and inflation's increasing, which is really worst case scenario for central planners. So the consumer is under pressure. And so from just the daily consumption patterns, you look at credit card levels and debt levels in the US close to all-time highs. And if you look at the spending on those, a big chunk of that is towards consumer staples as opposed to discretionary. So and then you couple that the with margin levels for retail investors in the US, and I know that's not everybody, but you're getting all-time high in in margin lending from retail investors. So you're looking at a pretty precarious level in markets in the consumer right now. So I'd be pretty surprised to think that you'd get a resilient consumer at this point in the US, particularly with the long end moving higher, because that's going to push mortgage rates higher. That's going to slow the housing market and so on and so forth. I know we looked at that a couple of weeks ago. So yeah, I'm more concerned about the US economy than I've been in quite some time.
Yeah, definitely something to watch out for.
Yes.
Still in the earnings season, Microsoft and Meta received different reactions to their earnings.
Yeah.
What does this signal about how market views AI spending going forward?
Yeah, so it's a great question, great point. I think if you look at how the market interpreted, at least today, they're both spending money on AI, but the market seems to say that Microsoft is maybe the picks and shovels. They're like the infrastructure. So with Azure and, excuse me, Copilot, tend to be the framework in which people work. So Azure is your cloud. It's like you get, service monthly fee. It's steady, it's reliable, and Copilot, again, data and storage, and seems to be more on the enterprise business perspective, as opposed to Meta's spending seems to be more towards marketing and the consumer and trying to do digital advertising across their platforms. And their spend has been a little bit less to do with the service side of it. And the market seemed to like Microsoft significantly more than Meta. I mean, Meta has talked about trying to build out their cloud services. So I think that'll be an important revenue line in the future. It's not today, but in this is their second call in a row where they've talked about that. So I think you're going to see them try to build that out. But at least right now, the market seems to be saying Microsoft is the infrastructure and Meta is more of the fund consumer discretionary type of AI spend.
Yeah, I see the charts.
All right, so we are recording this on July 30th around 1:30. So anything that happens between here and next week, we will comment on then. I want to jump in a little bit to do with sentiment. I think this is always a great gauge. I always like to see what's happening, how people are feeling. I like the layout that our team does over these 7 or 6 buckets here: momentum, volatility, breadth, risk, appetite, speculation, surveys. It's easy on either end. Extreme pessimism's a buy, extreme optimism's a sell. I mean, that's the way I would look at the world from a sentiment perspective. And right now, we've been hovering in this middle. We've been kind of 35 to 55. And now this was, and as of last week, we're at a 42. So you're getting a little bit of pessimism starting to creep in. If we were to look at the CNN gauge, which is another one, you have pessimism tilted towards the 30 level because of the sell-off we saw yesterday in markets. But if we look at where we are today, momentum is okay, volatility neutral, breadth, meaning how many stocks are going up, is in the red category. So that's not a great thing. How much risk appetite are people taking? That's been increasing. Speculation's been increasing, and surveys have been a little bit better. But we're sitting right now in the middle, which is kind of neither a buy or a sell signal. It's kind of a let's watch and wait and see. If you've had stocks that have done quite well and you want to trim, that's okay. If you have stocks that have been sold off for whatever reason, that's okay to buy as well. But we're sitting in the middle, which is kind of a wait, pause. Let's see what happens next. And then if we look at sentiment from the next chart is about looking at sentiment around the different economic components. And so we're looking at cyclical conditions, monetary conditions, momentum, valuations, and then sentiment, which is the previous one. So we saw that. So when we look at the breakdown here, Eva, we've been talking about the first one, which is U.S. economy, jobs, manufacturing, housing, and the consumer. So we're starting to see the red start to pick up a little bit there. So the U.S. economy is showing a negative risk off indicator. Global economy tend to be okay, closer to the middle now. Growth is okay. Manufacturing is okay. Leading indicators are decent. Financial markets have been kind of the one piece that has been positive. And so this is a double-edged sword right now where equities, bonds, FX, and commodities have been pretty positive. But at the same time, we have a significant amount of individuals' wealth in the US tied and connected towards the equity markets and bond markets and commodities. So that gives a lot more sensitivity. If we do get a correction, that puts pressure on the economy. And right now, we're kind of starting to see these things come to the middle, and something I think we need to be increasingly concerned about as the economy has a one handle on it. And that's a point where we start to be a little bit more cautious and something to think about. Monetary conditions, so quality of money, so real money, central bank assets, liquidity, credit growth, really negative. Cost of money, says we're in a decent position. So policy rates, interest rates, yield curve, credit spreads. It's showing green, but we've seen credit spreads actually start to widen out a little bit. Yield curve obviously steepened yesterday as well, so that's something to be conscious of. Momentum still decent, reversal risk, so watch for momentum overshoots versus macro conditions. So yeah, the risk is increasing there, and valuations. I mean, this one's been in the red for a long time. So this is valuations in equity markets are more extended than they've been in quite some time. So these are economic gauges. The previous one were market gauges. And then the last one is just looking at this from a little bit more bigger picture. So looking in more detail on the cyclical conditions. So to the point that we made, Eva, off the top, this was your question around consumers. How are they feeling and what's going on with housing? So this is particularly US related. So housing negative, yields moved up, prices down on bond yields. So that's an extreme negative in US housing. The consumer continues to be under pressure as well. We're starting to see some other factors here. Foreign exchange, global growth is slowing. Leading indicators are starting to be a little bit weaker as well. And then I'd say the one piece where we're seeing now the cost of money, and this is coming into question with the view is if inflation's starting to pick up, do interest rates need to pick up in term? If they do need to pick up in turn, then you would see these factors start to come under pressure, with the credit conditions being a little bit more challenging as we go forward. As always, the opinions expressed are not necessarily those of National Bank Financial. I prepared this with the best of my judgment and abilities. Everyone's risk tolerance is unique and different. If you have any questions, feel free to reach out to Eva or I, and we're happy to address and discuss anything that you think may be important for you and anything that you want to discuss within your investments or portfolio.
Thank you, Ben.
You're welcome.
What's in the agenda for next week?
So one of the pieces I know we've dribbed out a little bit talking about is yen, US dollar, and that potential reversal. I know we didn't talk in charts on it today, but the reason I want to reference it is it's in the first time in quite some time we've seen a big uptick in yen US today. This morning, around I think 10 o'clock, we saw yen up 2.5% versus US dollar, and that may not sound like a big move, but in currency land, that's a giant move. And so I think that'll be an important thing to watch and pay attention to. Japan has the largest amount of US denominated bonds. And their currency has been under pressure, and there's been some rumblings that they may intervene to provide some strength to the yen. So this could be a material crack that I think we need to pay attention to if they decide to start defending the yen, which is selling bonds and buying yen. That you could see a yen rally, which could unravel and add some increased risk within the financial markets and system. So that would be one that I'd be watching pretty closely, and that would have my attention. And tomorrow is the last day of the month, so we'd be heading into August. August, it tends to have the least amount of liquidity as any month because it tends to be a little bit quieter, but can result in a fair amount of chop. But generally, I'd be watching yen USD with that focus on potential cracks that could perpetuate into the financial system.
Okay, great.
Yeah.
Thank you, everyone. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. The link to our daily financial heartbeats will be in the caption of the video and in your email box. For our clients, please reach out to me if you have any questions or if you'd like to book a review meeting with Ben. Thank you once again for listening and enjoy the rest of your week. Bye.
Thanks, everybody. Bye. Bye.